What's happening, everybody? Hope everybody is well. So I'm here to do a video marking up key levels. Now, it's a very, very basic skill for anyone looking to get into the trading industry, get a little bit of a trading edge, wants a little bit of a helping hand. Now, key levels are historical levels in a basic sense. And once you get used to them, I recommend drawing them on. But once you get used to them, you will not have to draw them on anymore. You'll just be able to identify what's happening. Okay. Now, first lesson is, remember that everything reacts off of a round number. Anything big, anything computerized will not be acting on, smaller digits. It will go from a round number. So 0.25, 0.5, 0.75, or a whole. That is basically, in a nutshell, how it works. So I'm going to mark up GBP JPY here, and I'm going to show you from start to finish. Now, please remember, there's lots of different ways of doing this. So this is just one of the ways that you can obviously, mark up what is happening. So currently in a massive uptrend here on JPY, we've got yen threatening an intervention because obviously USD JPY is the common denominator for yen pairs and it's a bit high. So all I want you to do, there's a tool, this is TradingView, horizontal line tool here. I want you to mark up, just significant, levels where price has moved or rejected, and then obviously we'll go back through and check them. I don't want you to go too crazy on the monthlies. I want you to mark up. You don't need to do a whole load either because you've got to be realistic. All right. Is it going to hit it? You want to be changing these all the time. I recommend once a week, going through them and potentially changing what you're looking at here. So I've got these in blue because we're going to explain why in a minute, but I will probably leave monthlies at this. All right. And what you can do here as well, if we click on it, we can put visibility. Sorry, we can put text on it. There we go. So we're going to put left. Okay. And we're going to put monthly. Yeah. Monthly here. We're going to click monthly here. I'm actually going to copy and paste it so it's a bit quicker. Oh, doing really well here. There we go. Okay. And actually, we're going to do them all on the right. I always do it on the right, so I don't know why I did it on the left there. There we go. We're going to do it here as well. And here as well. All right. So you don't need to go crazy. All right. That's the main thing. Once you mark them up, I want you to have a look at the actual coordinates, the price of it. All right. So where is going to be closest? I probably would round this up to, 700. So that would be one. Let's have a look at this one here. Very, very easy. 214. So nice and easy there. Have a look here. Nice and easy there. 3 pips off 203. Remember, these are monthly. We're going to mark up weeklies as well. And I'd probably leave these. Let's go to 800. All right. Nice and easy there. All right. So we've got our monthlies here. I don't want to worry about marking anything else up. We're just going to leave them as is. You then go down to your weekly time frame. For anyone who doesn't understand how to move time frames, click on the arrow and you can actually star them and then they'll come up. All right. So that's what I'd recommend. So weekly wise, we then want to have a little scroll back, a little, look at what's been happening here, in between any areas. You want to kind of judge it on relative price. So I'd probably have one here, you can see here, and you can change the color as well. So let's make weeklies yellow. All right. So let's do this here as well. Weekly, but let's make sure that we copy and paste it so I don't have to type it out every time. So we've got weekly there, marking up there good as well. So pretty happy on that. That's rejected there. Potentially put one here as well. All right. So we'll then do this one here as well. So weekly there as well. Probably have a little look around here. You don't want them too close together either. And then you can have one a little bit lower if you wanted to, potentially around here. All right. Let's mark this one up here, weekly, and this one up here, weekly there. All right. Now let's have a look at the weekly levels. Make sure they're rounding them up. So 345, round that up to 350. All right. Next one. 420. Probably can just put it at 400. Zoom these out here. So 400. We then got this one here. Probably 350. And then, oh, nice and easy. 450. There we go. So they should be roughly around round numbers. You can see here, price rejected this, pumped up. Where does it stop? Here. All right. When price comes down to this area, where does it reject? This exact same level here. So levels do matter and they will help you. All right. So then we're going to go on a daily time frame. Now you want to keep this relatively close to where you actually are. So we're going to put potential a daily here. So we're going to put one here. Let's change the color of it, maybe to a nice green. And we'll make sure we put daily, and we will make sure we copy and paste this as well. Okay, so that'll be one daily there. We're actually approaching a daily level here at the moment. I probably have one here. All right, and I'm going to explain the importance of it here as well. I mean, you could have one a little bit closer here if you wanted to. I like that. You want to keep it relevant to where everything is as well. And you can definitely see price here. Yeah, you know, you can see all the rejections here. All right, so that is obviously what we like to see. So obviously that is our price here. All right, now, you know, you can see, you can already start to, see as we zoom in. If we go down to, say, for example, a 2 hour, all right, we've already got this daily level, marked up, right? Let's now go and make sure it hones in. So that'll be 100. And then we got this one here, which would be 900. And we've got this one here, which is going to be 50. And then this one here, which is going to be, say, 200. All right. So we've rounded these all up. What happens here? And obviously, how can you utilize this? All right. So this is obviously for intraday. Doesn't matter what kind of, time frame you're on. Let's use this, 30-minute here as an example. All right. You've tracked trading. All right. You're up nice and early. You've seen here Asia's died off. Hit the daily level here. All right. Why is it rejecting here? All right. Because it's rejected previously. All right. So that's obviously one thing we're looking at. You can see here, what are we looking for? We're looking for price to move away from it in one direction or another. I'm going to do the EMAs in a different, but obviously this will be a confluence for me to take it to the downside here. All right. So all I'm waiting for is an impulse in price to take it one way or the other from the key level. All right. So for example here, we'd be looking, right, wham, this candle happens here at 8 o'clock. Perfect. All right, you can enter here. All right, you put your stop just above that candle. All right, and then you might want to go down to this key level here, which would be 1 to 1.62. Or if you wanted a real long swing, you could do that. Let's hypothetically say 1 to 1.6. All right, you can see it here where obviously, everything is. Where's it heading? All right, and what this does as well, it gives you targets, right? It gives you overall targets of where you want to take a trade. Right? Yes, you can mark along the way potential areas where it might, struggle. But obviously, this is the main idea about marking up key levels. It just gives you that direction and where you want to take it to and why. And so that's obviously one thing to look out for. And obviously, yeah, that is how you mark up key levels, beginner basics. If you like what you see, give me a like, give me a follow. And yeah, I'm going to be doing loads more content like this. So yeah, hopefully I'll see you in the next video. Let's go.